is Money Monday, a segment here at 4 o'clock where we talk about easy-to-understand ways to navigate our finances. We do it with our financial expert, Paul Hood, with Hood CPAs. Paul, always great to see you. We got you virtual today. You're down in Austin. We have 3 great viewer questions. Let's kick it off with David. David wrote in over the past week saying, I need to purchase a truck for my business. Would it be more beneficial if I purchased the truck personally or through the business?
Well, David, that depends on the entity structure of your business, how much you're going to use the truck, how much the truck weighs, how big it is. The IRS has a classification of assets called listed assets, which means they're assets that are personally used, or they have a personal use and a business use to them. And so a truck is like that. So if the truck is over 6,000 pounds, then it's treated more like a traditional asset. So if your business is an S Corp, then your business has to reimburse you for the use of that truck. So the point is, if you're going to use it mostly for business and it's over 6,000 pounds, it's usually better for the business to own it. Now, if you do that and you're on the payroll for your business and you use that vehicle personally, then you have to actually impute in your wages, David, for your personal use of that. So the net effect is pretty close to the same, but it really depends on the entity. So S Corp, usually it's good to have it in the business. Partnership, there's some other ways to deduct it. So it just depends.
Well, remember that business owners don't want an S10. Okay. On to James now. James says, my son will be a student athlete in college this fall. Can my small business offer an endorsement or sponsor my son?
So what James is talking about is, it's going around the NILs and be able to sponsor an athlete and take a deduction for it. Well, here's the deal, James. What people don't talk about is those athletes, that's income to them. So they have to pay taxes on that. So you can sponsor your son, that's just fine, but your son is going to have to pay taxes on it. And the IRS is going to look at it a little closer because it's not an arm's length transaction. And there has to be a reasonable necessary deduction. So yes, you can, but make it deductible for you. It's got to be taxable for your son.
Last question goes to Beth. She says that her mom recently died and her house is in her sister's name. The 1098 for the mortgage interest gets sent to her sister, but she wants to know, since she's paying on this, if she's able to deduct the mortgage interest.
So sure, if it's her primary residence, it doesn't matter whose name the house is in because it can be what's called a seller financed mortgage. She just may have trouble with the IRS matching it up. So she needs to have somebody help her with her tax return that knows how to report that properly. But just because the 1098 is in mom's name, if she's paying it and it's her residence, she can deduct it.
All right, good stuff today, Paul. Great to see you, my friend. And if you're watching now and you have a financial question you'd like for us to talk about next Monday, you can send in your question right now to moneymonday@griffin.news.